Hey, welcome back everyone. This is Uncle Frank and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Followers of this channel know that Uncle Frank is counting the days until Donald Trump fires Gary Gensler. But now even this hyena is sharpening her axe to rid the stock and crypto markets of the most corrupt, useless, worthless, pig-eyed Goldman Sachs garbage that a rat wouldn't eat even if Gensler was covered in chocolate sauce. Harris team identifies potential replacements for SE chair Gary Gensler. Kamala Harris's team is looking at Chris Brummer and Erica Williams as possible replacements for SE chair Gensler, who has been tough on crypto. Chris Brummer has a strong crypto background and would likely bring a more favorable approach to the industry if chosen. 4 large crypto accounts have bet $30 million on Trump winning the election, adding more chaos to an already tight race. Before we move on, let's examine what Gary Gensler's SEC has been doing over the past few days per the headlines. No, the SEC isn't backing off Solana. And SEC's Ripple appeal doesn't challenge XRP's non-security status. And the SEC approves NYSE CBOE listings of Bitcoin options on ETFs. And another, Crypto.com versus SEC, is a bold bet the company case. If the exchange's lawsuit can clear one procedural hurdle, it will have the regulator on its heels in Texas. Now, is it just me, or is the SEC only about crypto now, except for this last piece here? SEC approves NASDAQ rule change on reverse stock splits and minimum bid price compliance timing. According to that article, the SEC has approved a rule change proposed by NASDAQ that affects companies utilizing reverse stock splits to regain compliance with NASDAQ's minimum bid price requirements. The new rule applies immediately, and under the new rule, a company will not be considered to have regained compliance with the bid price requirement if the company takes an action such as a reverse stock split to achieve compliance with the bid price requirement, and that action results in non-compliance with another NASDAQ listing requirement, such as maintaining a minimum of 300 public shareholders. You notice we never have a conversation about the guys responsible for these companies being forced to reverse split their stock to stay listed. In other words, the predatory short hedge funds, the market makers, the people that are pounding the stock prices into the ground. We never talk about that. No. So if the hedgies and market makers are destroying your company, now doing a reverse stock split doesn't necessarily buy you another chance if you're also not meeting some other NASDAQ requirement. Is that what I'm reading? I've been preaching this for years. This agency does not protect retail. It protects Wall Street companies that terrorize publicly traded companies like Mullen, Highcroft, and so on. Hashtag XRP, Ken Griffin, Bitcoin, and crypto ETFs. This is what we're missing out on because of Gary Gensler. Given the choice, I think the big investors would opt for XRP over Bitcoin or Ethereum because the coin is priced low and it's a better project in every possible method of measure. An article from the Motley Fool. Billionaires are buying a BlackRock index fund that could soar up to 73,000%, according to Wall Street experts. Top-rated hedge fund managers Ken Griffin, David Shaw, and Israel Englander bought shares of the iShares Bitcoin Trust in the first half of 2024. Bernstein analyst Gautam Shagani estimates Bitcoin could return 1,390% by 2033, and Michael Saylor forecasts as much as 73,000% upside by 2045. Spot Bitcoin ETFs eliminate friction associated with cryptocurrency exchanges by offering direct exposure to the crypto via existing brokerage accounts. Pay attention, guys. We're getting up there. The benchmark S&P 500 index on Friday notched a 6-week win streak, its longest weekly advance of 2024. It also notched its 46th and 47th record close of the year. Meanwhile, it was a historic week for the venerable Dow. The blue chip gauge surpassed the 43,000 point mark for the first time ever, while posting its 37th through 40th record close of the year. With the third year of Wall Street's bull run kicking off, markets continue to march upward. This week's advance was driven by a combination of strong earnings, a continued rotation into all corners of the market, a robust retail sales report, and increased hopes that the Fed Reserve would be able to deliver a soft landing. On your screen are the results from Friday. All the big indexes were up except for the Russell 2000, which shed 0.21%. Notably, crude oil now solidly under 70 at 69.34, giving up 1.88% on Friday. Gold, 27.3640, up 28.90, which is 1.07%. Financials continued to advance after Morgan Stanley joined peers JP Morgan and Goldman in delivering results that showed a rebound in investment banking and deal-making activity in the quarter. Also, Netflix cheered investors by easily topping profit and subscriber growth expectations. The earnings season becomes a deluge next week, with some of the world's biggest and most well-known firms announcing their financials, including electric vehicle giant Tesla. For the week, S&P added 0.9%, NASDAQ gained 0.8%, and the Dow added 1%. I was taught to keep an eye on the sectors before you invest. What's moving in the S&P 500? Utilities up 3.4%, followed by real estate at 3%. What's losing? Energy, giving up 2.6%. Under commodities and bonds, crude oil, West Texas lost 8.4%, while gold gained 2.3% for the week. Natural gas down 14.5%, and the 10-year bond yield losing 0.2 basis points to settle at 4.075. Under Forex and crypto, Bitcoin added 8.1% for the week, Litecoin 11.5%, Ethereum 7.2%, and XRP 1.8%. The top gainers of the S&P 500, United Airlines up 20%. Top losers, Gary Gensler and Adam Aaron. We could add this to my long list of potential swan events. U.S. budget deficit tops $1.8 trillion in fiscal 2024, third largest on record. The U.S. budget deficit grew to $1.833 trillion, the highest outside of the COVID era, as interest on the federal debt exceeded $1 trillion for the first time, and spending grew for the Social Security retirement program, healthcare, and the military, the Treasury Department said on Friday. According to MarketWatch, gold may not reach a price ceiling anytime soon, and here's why. The rally in gold showed little sign of a slowdown on Thursday, even as futures prices for the precious metal touched their highest intraday level on record for the 33rd time so far this year. Gold isn't likely to reach a price ceiling anytime soon, said Michael Armbruster, co-founder and managing partner at Altavest. Quote, "The trend is up and the key drivers for gold are unchanged. Out of control federal spending, which ultimately forces the Fed Reserve to debase the U.S. dollar," he told MarketWatch. But Uncle Frank, what about silver? Well, I have a very unusual theory about why silver is the most feared and manipulated commodity on the planet, and even an explanation why investment banks traders are willing to go to jail every year in an effort to keep it under control. It's very simple to me. Silver is real money for the poor and the middle class. They can't have those segments prospering at their expense. Central banks certainly don't need a competing currency that has intrinsic value. There hasn't been any silver in circulating coins since 1964. If silver becomes the currency of the masses, they would have a hedge on inflation, and their currency would have buying power. They want you earning, saving, and spending their paper shit money backed by nothing. And before you know it, the only money they'll want you using will be digital. No more hiding transactions anymore. If you spend money at a friggin' garage sale, they'll know about it, and they can tax that transaction too. Hopefully, Uncle Frank will be gone by then because he's planning to be raptured. The Daily Hodl had something interesting to report on Friday. Global debt will shatter $100 trillion this year as governments prepare to increase spending, warns the IMF. The International Monetary Fund is sounding the alarm on skyrocketing levels of debt held by governments around the world. In its newest Fiscal Monitor report, the IMF says global debt is expected to surpass $100 trillion by the end of the year. That's up from $97 trillion a year ago, with the United States accounting for about half of the $3 trillion increase. Okay, so now what's next? October 21st, 10 a.m. Eastern Time, U.S. leading economic indicators, and 3 Fed presidents will be running their mouths. In fact, they have 6 separate events scheduled this week for every day but Friday, so they will be out there selling the soft landing theory. Tuesday, October 22nd, the BRICS summit in Russia begins and continues to Thursday, the 24th. I can't wait to see what dribbles out of that shit show. Wednesday, October 23rd, 10 a.m., existing home sales. I guess I'll watch that. I've been rooting for a crash or even a correction in real estate so all my kids can buy condos. Thursday, October 24th, 8:30 a.m., initial jobless claims again, followed by S&P Flash U.S. Services and manufacturing PMI at 9:45. Now, we could get some market-moving headlines out of the BRICS summit, and right before the election, BRICS could certainly affect crypto, precious metals, the U.S. bond and stock markets, not to mention the U.S. dollar, right? Especially since they're trying to replace the U.S. dollar as the world's reserve currency. Now, Friday, October 25th, 10 a.m., final consumer sentiment. On a side note, I expect Bill Wang of Archegos to be sentenced on Monday, October 28th. Uncle Frank is the only guy out there that believes that the U.S. government, the DOJ, and its regulators are so corrupt they will only give Bill Wang a sentence reduction if he agrees not to rat on the Wall Street bad actors. That's how effed up our capital markets are under this administration and Gensler. I just want you to know it took bringing down a 168-year-old Swiss banking giant before our government and its worthless regulators finally went after this hedge fund. Now, guys, what if 700 hedge funds close, like in 2008? Think about that. Look at the damage just one hedge fund did. Tuesday, October 29, 10 a.m., October consumer confidence and job openings. Wednesday, October 30th, 8:15 a.m., ADP employment numbers, and then at 8:30, GDP. Now, here's the big one, guys. Thursday, October 31st, and Friday, November 1st. It's a 2-day atomic bomb window. All at 8:30 a.m. on Thursday, personal income and spending, initial jobless claims, and the Fed's favorite, the PCE index and the entire data group. Then on Friday, November 1st, 8:30 a.m., U.S. employment report and unemployment rate. If this rally survives these 2 days, I think the fix is in, right? What a way to finish a month ahead of an election like this. But wait a moment, Uncle Frank, not so fast. Bill Wang's sentencing in Archegos case postponed to November. Archegos founder was originally to be sentenced on October 28th. Judge also let Credit Suisse file a sealed victim statement. Now we have to wait until after the election on November 20th. The chess pieces are moving around, kiddies. Now, guys, if all that wasn't enough, look at the earnings schedule for the next 2 weeks. I can't even fit all the important ones on the screen. Obviously, our crowd will be watching Tesla after the bell Wednesday, but this is a tidal wave of data and information for the markets to digest. Buckle up, buttercups. I predict some volatility here. Hashtag AMC from thestreetinsider.com. Citi reiterates its sell rating on AMC Entertainment. Citi analyst Jason Bazinet reiterated a sell rating and $3.20 price target on AMC. Well, that's all he's ever done, and that's our chief investment banker to this day, Citi, the author of The Ape. You remember the pounce and the reverse split? We never needed to do, but Wall Street certainly needed it, so Adam went with it. A notorious short seller of the stock is Citi, the same firm we trust to hand out our stock to short sellers. Hashtag Adam Aaron. Well, 3 weeks ago, Adam said he has much to say on the company's upcoming earnings call. Depending on who you ask, TipRanks thinks it's going to be November 3rd. Wall Street Horizon thinks November 7th, and Zacks is thinking November 13th. What does Uncle Frank think? It's going to be in November. I think we will surprise and beat Q3 of last year, not investment advice or advisor, which was our best third quarter in our entire history. And yes, that includes the pandemic. That night, the writer's strike also ended. So I expected the greatest rally since the big one. But Adam dropped a dilution bomb pre-market the next day and destroyed the rally before it even had a chance to start. He never mentioned any dilution during the call. He saved it as a surprise for the following morning. The stock could have advanced, and we could have sold it at much higher prices, but that wouldn't have benefited Wall Street, which is what our management team has been all about since the beginning, because they are Wall Street. Maybe Adam will forget to strategically dilute this time, and the Limit Up, Limit Down committee, which includes Citadel and Virtu, will forget to halt the stock into a coma. You're too negative, Uncle Frank. No, I just still maintain the only way out of this mess is Adam to be removed for breach of fiduciary duty, or a swan event that forces our enemies to cover. Hashtag Apollo. For those of you keeping track, the firm Adam was a senior partner at for 9 years just before joining AMC to extract every penny he could bleed out of the company, just hit an all-time high of 146.36. while AMC is down over 91% over the past 60 months. Meanwhile, Cinemark, who pays their CEO a third of what Adam steals and actually has more debt per screen than AMC has, screamed up over 74% this year alone. Hashtag Archer Aviation. So Archer closed exactly flat at 319 on Friday, just like it did on Thursday, and just like it did on Wednesday. What are the odds, right? So over 22,718,000 shares traded over 3 days, and we have the exact same closing price. Anyone care to crunch the odds on that? I think it all had to do with the 24,700 calls in the money and the 229,000 out of the money calls that were all expiring on Friday. So in an effort to help out, Rick the Dick Durant from Morgan Stanley Singapore thought he would write a dilution hit piece and drop it Friday morning on expiration. It's overseas, so FINRA won't give a shit, and Gensler is too busy attacking crypto to do his job. So this kind of shit will continue until Archer blows the shorts out, not investment advice or advisor. Hashtags BRICS, baby. Putin says BRICS, not the West, will drive global economic growth. They're coming for us, guys, but don't worry. Our border czar, Kamala, she's got a plan. Hashtag cat system. Wouldn't it be ironic if the people we pay to protect retail actually use this system to protect Wall Street? Remember I said that, okay? I want you guys to know the first FDID refresh report will be delivered for compliance with the periodic customer and account information refresh requirement no later than 5 p.m. Eastern Time on April 3rd of 2025. All of our prayers are answered. Hashtag credit card debt. So how's the $1.14 trillion credit card debt crisis coming along? Well, according to the Washington State Standard a month ago, U.S. credit card debt continues to rise. And then CNN remarked 4 days ago that Americans haven't been this worried about making their credit card payments since the pandemic. And just 2 days ago from CBS, 2 in 5 U.S. credit card holders have topped out their spending limit, report finds. Hashtag debt ceiling. I want you guys to know that if we actually survive this upcoming election in 17 days, Uncle Frank's calendar for 2025 is already looking saucy. Battle over federal government shutdown and the debt limit loom this winter. In January of 2023, the U.S. reached its debt ceiling of $31.4 trillion. To avoid defaulting on its obligations, Congress suspended the debt ceiling until January 1st of 2025. This suspension allows the government to pay its bills until then without the threat of a default interfering with the presidential election. So the first thing we're going to do post-election is have a nice debt ceiling showdown. Hashtag GME. GameStop may have figured out their next venture, and it could work. GameStop's shift to trading cards and partnerships with PSA could offset declining video game sales, positioning it as a national card shop chain. Okay, what you need to add here is if they're going to put Bitcoins in the packs of trading cards, because I think that is going to be big. GME's strong balance sheet with over $4 billion in cash and minimal debt provides a significant runway for reinvention and new business ventures. It's all about that. We can stop talking right there. The trading card market's growth and synergies with video games offer GME opportunities to host leagues and tournaments and create content, enhancing customer engagement. All true, but not important. All that matters is when Ryan is going to drop the news about starting a new business or buying a new business. Will that happen before or after the election? I'm guessing after, and that's all that counts. Hashtag Highcroft Mining. There's the hourly on HYMC. Going back to the 7th, we put in a low of 227 and a high of 266 and finished Friday at 261, up 18 cents or 7.41%. Okay, let's run through the stats, starting with Archer. Short interest, 51.84 million shares. Short interest ratio, 7.88 days to cover. And short interest as a percentage of float, 23.32%. Short interest for AMC, 57.17 million shares. Short interest ratio, elevated, 12.48 days to cover. Short interest as a percentage of float, 17.03%. And then GameStop, 38.13 million shares. Short interest ratio, 8.70 days to cover. And short interest percentage of float, 9.33%. We'll finish off with Highcroft Mining, 1,477,000 shares for short interest. Short interest ratio, 7.13 days to cover. And short interest as a percentage of float, 7.60%. And to wrap it up, yes, November and December already look like a haunted house for stocks, bonds, oil, precious metals, and crypto. In November, I expect 3Q earnings releases from AMC, Archer, and Joby, and the November 5th election is now only 17 days away. Archer has confirmed for Thursday, November 7th after the bell. The November Fed meeting is scheduled for the days immediately after the election, the 6th and 7th. So that's already getting amped up. Hunter Biden is expected to be sentenced on November 13th, and Bill Wang is now going down on November 20th. I also believe the immediate future of crypto could swing on this election. Trump has promised to dump Gensler on day one in office, But that's not until January 20th of 2025. That's 93 days away. And now we've learned even Kamala wants Goober gone. GameStop's next earnings date is unconfirmed but expected early December and typically after market hours. The big question is, will Ryan Cohen drop his future plans for the company before or after the election? My guess is after, which could make the fourth quarter GME earnings call, in a word, explosive. By the way, December 17th and 18th will be the last FOMC meeting of the year, and that very same week, Friday the 20th, will be this year's last quadruple witching day. Even that week has the potential to blow a hole in your IRA. Then we'll start the year with a potential debt limit showdown and possible shutdown of the government. I still say we have a swan landing before the close of this year. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.